Hey there, Tom Hicks, CPA here with J.T. Hicks and Company Tax Advisors and Consultants. And today I want to talk to you about some changes in the federal tax law that are coming for 2026, which affect business owners. And more specifically, I want to talk about the requirements for Form 1099. Now, most of you, if you own a business, you've either received a 1099 or your tax professional has told you that you need to prepare and file these returns. So we're going to talk about some changes that are upcoming for 2026 that I think you really need to know about. And so I've got a presentation here for you, which we're going to start right now. So let me give you an overview of Form 1099. 1099, the purpose of this form is to report certain kinds of payments that you make as a business to non-employees and or for other income types like rent, royalties, etc. Fishing proceeds is another one that we see here in New England quite a lot because of our maritime background. Common types, the most common types of this form are the 1099 NEC, meaning non-employee compensation, and 1099 miscellaneous. Now, for a very long time, 1099 miscellaneous was the only one that we had, and it was all encompassing. And for some reason, the Treasury Department decided that they were going to kind of split and create two forms and transfer some information between each for some reason that was probably obviously for the benefit of the government. So, and again, you use these forms to report payments to contractors, freelancers, and other service providers. So let's talk about what types of entities should receive a 1099. So sole proprietors and independent contractors should be getting 1099 if they meet the level of disbursement that you've paid them. Partnerships, certain LLCs, taxless partnerships, attorneys and law firms, even if they're incorporated, you absolutely have to send a 1099. Recipients, as I mentioned, of rent, royalties, and other non-employee payments. So now, typically, friends, if you are dealing with a corporation and it is blatantly obvious that you're dealing with a corporation like Bob's Plumbing Incorporated, or a roofing contractor that the name of there is Acme Roofing Contracting LLC, or INC, something like that, then there's a pretty good chance that that company is really exempt. I'm going to talk about how to kind of cover yourself in the last slide here, how to make sure that you protect yourself in these types of situations, because not every time that you see LLC or you think you're dealing with a corporation, let's just say, I'm going to pull this one out of the air, Roto-Rooter. Okay, now many businesses are franchises, and that doesn't mean that the local operator is operating as a corporation. You think of Roto-Rooter and some of these other ones as being corporations, but if it's a franchise, there's a pretty good chance that it might not be a corporation. So that's usually the get out of jail free card. If it is in fact a corporation, you're exempt. You don't have to send them a 1099. That doesn't mean that you can't do it. It just means you don't have to do it. Attorneys and law firms, no matter what you do, you're gonna have to issue this document as long as it exceeds the minimum amount, which we're going to talk about in one of the next slides. So in fact, it's become so common, many law firms actually publish their taxpayer identification number on their website, mostly so you don't have to call them, and they can cut down the amount of phone traffic, especially around tax time. So if you have a business, again, that's maybe renting space somewhere from an individual, it could be an LLC, but that doesn't necessarily mean that that person is reporting as a corporation. So you need to be able to capture that information. Again, I'm going to give you some tips for how to avoid problems in, around tax time. That's, February, March, and April. So, all right. So let's talk about a comparison of the regs in 2025 versus 2026. So many of you are all been familiar with the old amount, which was $600. So if you paid, Bob the plumber $599, you were not required to issue a 1099. That amount beginning in 2026 is increasing to $2,000. So I think this is really a great development because there's just so many businesses that are burdened by this reporting requirement, and this could take quite a few things off of your plate. If you're a construction contractor, you're probably already used to this, and it's a lot of work to do at the end of the year. But if you have a bookkeeping system like QuickBooks, you can capture this information automatically and even create and file the 1099 forms, whichever one is applicable. So starting in 2027, these amounts are going to be indexed for inflation. So, it's possible that these amounts could start going up depending on what's going on with inflation. 1099-K is one that not many people are familiar with. This is a document that's issued by your credit card merchant services company, and they will report to you that you processed a certain amount of credit card transactions. The document will list it by month, and so there was a lot of acrimony out in the marketplace about this some years ago, and so the Treasury decided to back off and not implement any of these provisions. But now this is, we're getting more comfortable with it, and that this just means that there's going to be some stuff coming into your mailbox or your inbox telling you that, hey, we process these credit card transactions, which it's going to be important for you to share that information with your tax professional. And if you're giving out prizes and awards and anything that now exceed $2,000 or higher, you're going to have to issue Form 1099 miscellaneous. Previously, that was $600. So, okay, so let's talk about filing and compliance tips. This is one that I talk to our clients about quite a lot, is getting taxpayer identification numbers. Now, sometimes this is a Social Security number, sometimes it's an EIN number, sometimes it's called a TIN or a taxpayer identification number. And too many of my business owners are too anxious to get whatever it is that this contractor or this provider is going to do for you, to get it done, and they pay the contractor. And the scenario looks like this. Come February, you're sitting in my office and I'm looking over the details, and I have to say, hey, we've got to issue 1099s. Did you get all the required information, name, address, and taxpayer identification number, Social Security number? And you look at me like that deer caught in the headlights, like, what? And so, look, you have a filing, you have a compliance requirement here. And so my clients are educated because we educate them in advance about these things. And I advise them, look, there's this great form from IRS. It's called W-9. You can get it at irs.gov. If there's any question in your mind, before you pay this contractor or vendor a penny, and I mean a penny, you get them to fill out that form, sign it, and give it back to you. Then you can pay them. This form documents the name, address, and the taxpayer identification number, whether it's an EIN or whether it's a Social Security number. And that document is like having gold, friends. It's gold, right? Because if something bounces back from IRS when you file these forms that says, hey, this name and this number don't match, all you have to do is respond, hey, Mr. Commissioner, I have this document signed by this person, and here's the information that they gave me, and you are off the hook. You're completely off the hook, no penalties for you. So that's why you need this document. Absolutely, positively, don't do business with anyone that refuses to sign that document. Okay, you could be subject to significant penalties for not filing 1099 and not reporting it. So, do yourself a favor, get this document in advance. Don't pay a penny until you get this document. All right. The next item is, is electronically file these documents, friends. Your tax provider, or your tax professional rather, probably has the software to be able to do this. It's worth it to pay them to be able to do it. You can do this, I know, through a lot of common bookkeeping systems like QuickBooks. So do this electronically. Save yourself the hassle of running down to Staples and getting that package and then having to fill it all in by hand because it's all that, that those forms that have little carbon bubbles in it, etc. Or trying to resurrect an old dot matrix printer. My God, I think the only people that use those are airlines now. So now your requirement here is to file, these forms by either January 31st or February 28th or March 31st, depending on which form you're filing and whether you're doing it electronically or by paper. But, please don't do this by paper. It's a lot of work and it's just not worth your time. So find a way to do this electronically. You'll have a receipt that'll prove that you filed and when you filed. So just be aware that you have some due dates here. That's either January 31st, February 28th, or March 31. A good rule of thumb is get them all out to the recipients no later than January 31st. It's just your requirement to file with IRS might be one of those three dates. So, and by all means, please do keep copies of all of these for at least 4 years. And you can keep this in electronic copies. If you can print it to a PDF, that's all perfectly legit now, right? You don't have to have, dozens of file cabinets in your business to be able to comply with regulations. So that's it for this presentation, and I really appreciate you watching. And let me leave you with this thought that a tax advisor is not expensive. We are priceless. So again, I'm Tom Hicks, CPA and with J.T. Hicks and Company, tax advisors and consultants. And thanks for watching, and I'll look forward to seeing you again soon.